This is your LMAX exchange technical update for Monday, March 6, 2017. Euro dollar. So the euro has been unable to establish below that 105 barrier that we talked about, and this has opened this big push higher back above 106. Still, the market remains confined to an internal consolidation here, and we need to see a break below 105, a close below 105, or back above 106.80 for clearer directional insight. But this bounce does open the door for the possibility of this inverse head and shoulders formation on the daily chart with a pushback above 106.60 to strengthen that outlook. But if the market is capped below 106.80 on a close basis and we trade back below 105, it will open the door for a resumption of declines towards the 14-year low at 103.41, which guards against the parity test further down. Sterling dollar. So cable is now back under pressure after breaking down below some key support in the 123.45 area. This does suggest that we could see a return down towards the recent low from this year at 1987, that January 2017 low, which guards against the more critical support, that plus 30-year low from October of 2016 at 118.41. Any rallies should be very well capped, while ultimately it would take a break all the way back above 27.75 to take the pressure off the downside. Dollar yen. So dollar yen has been consolidating over the past several days, and although we did see a bit of a bounce in recent trade, the market continues to be very well capped on rallies and is expected to potentially trade lower again, with a break below 11.60 to expose a drop all the way down below 110 and now potentially into the 108 area. Again, we would take a break back above 115.62 to negate this bearish outlook and force a shift in the structure. Euro Swiss. So despite this impressive rally that we've seen in Euro Swiss back above 107 on Friday, the market has continued to be very well capped above 107 and is expected to once again roll over in favor of this bearish continuation, ultimately below the 2016 low at 106.24 and towards the 105 area next. It would take a break back above 107.60 to force a shift in this outlook and put the pressure back on the top side. Aussie dollar. So Aussie has been rolling over the past few sessions, breaking back down below 76 after a very impressive run in 2017. But this topside failure does suggest that the market could be poised for deeper setbacks in the weeks ahead, ultimately back down towards medium-term support in the 71.50 area. Dollar CAD. So dollar CAD has done an excellent job being supported down by 130 with this latest bounce accelerating gains, and the market is now focused on a retest of that critical multi-day high that we've seen back in December of 2016 around 136. Any setbacks should be very well supported now ahead of 131. Kiwi dollar. So Kiwi continues to show signs of rolling over, and there's risk now for deeper setbacks towards next key support in the form of that low that we saw back in December of 2016 around the 68.60 area, below which would expose more meaningful support at 66.76 further down. SPX 500. The S&P 500 is stalled out just off recent record highs from last week, but the uptrend remains firmly intact, and at a minimum the market would need to establish back below 23.50 on a close basis to suggest that we're seeing the potential onset of some form of a corrective reversal. Until then, there's risk for the market to be supported and for a fresh push beyond the recent record high and towards the 24.50 to 2500 area further up. That being said, technically this market is well overextended, so a correction should be around the corner, but again, this has been an intense uptrend where corrections have been few and far between. Gold. Gold is constructive now, with the market continuing to be very well supported after being unable to establish below 1100 back in 2016, and we've since seen this basing outlook with the market bouncing and now establishing back above 1200 with a series of higher lows and higher highs. So look for this latest pullback now to be supported ideally above 1216, that previous low, in favor of the next major upside extension back above the 1265 area and towards 1300 further up. But ultimately, only back below 1180 would compromise the constructive outlook for gold.